All right, let's talk more about it. Joining us is Claudia Sahm, new Century Advisors chief economist and a former Fed economist. I mean, Claudia, that will be interesting, right? We'll see who dissents. We'll see how divergent the dot plots are. What are you looking for?
Yeah, and I want to underscore that even in normal times, like, we would expect there to be a lot of differences of opinion. This is a very tough setup for the Fed. We still have inflation elevated. It has been above 2% for more than 4 years now. And we've had some really disconcerting numbers on jobs and what's happening in the labor market. So it's dual mandates in conflict, and that is going to bring out a lot of different opinions about what is the appropriate next step. So I think that piece of it just comes with we're in an economy that's really tough to read right now, and whichever way they move the Fed funds rate, it's going to work against one of their two goals, right? So they're picking kind of the trying to fight the greater of two evils here. So it makes it tricky, and we should expect to see these differences of opinion. Now, we overlay on top of that things are not normal at the Fed right now. Right, there is a political piece to what's being pointed at the Fed that I think creates more, as you said, palace intrigue than in a typical Fed meeting where you've got the dual mandate and conflict.
Do the dissents matter? Does it matter that they're on different pages? I mean, should the market take anything from that?
I think the big question for the market today is what's the guidance? We feel fairly confident that they're going to reduce the federal funds rate by 25 basis points. In the grand scheme of things, that is not a big move in interest rates. The big move, and what has been priced in, is that this is the beginning of a pretty aggressive cutting cycle, not just this year, but on into next year. And that's the piece where, listening particularly to Chair Powell as he channels where the committee is on this, like, is that what the Fed is set up for? I don't think that's what, given the risk, particularly with inflation, that the Fed is ready to kind of commit or even kind of softly commit to that path. But I don't know. I mean, it's a really tough one on merits to call, and I think we're gonna learn a lot. And the dissents may tell us something, but it's like, listen to Powell. He is the one who is going to communicate.
100%. What about your thoughts? So you're the inventor of the Sahm rule, which has gotten a lot of attention, and it's based on this idea of calling recession, given what's happening with the unemployment rate, which is starting to move up a little bit. What is it telling you now?
Right. So the Sahm rule, in terms of the change in the unemployment rate, we are nowhere near its historical trigger. Now, I think because we have such a reduction in immigration, we have the labor force aging, so we have this labor supply issue. So that makes the unemployment rate maybe be late to the game. So I'm not, resting easy that we're far from triggering the Sahm rule. And yet, I do think some of these the jobs numbers, the growth that is really slow to a crawl, I'm not as convinced that all of we've got a recessionary setup. I think the risks are there. It is absolutely appropriate for the Fed to move and insure against some of those risks. But I also see some real risks in terms of inflation getting stuck. And we know from yet more household surveys, like the Michigan survey on Friday, people are still really feeling this. Like the inflation, even if it's not just, that much higher, it adds up over time. So I think they really do have to balance these two risks. And that means we could kind of have a stop and go in terms of adjusting policy, as opposed to just running the table in terms of getting back to a neutral rate quickly.
Yeah, well, the market might be disappointed if it's stop and go now that it's starting to really price in some cuts. Claudia, thank you for joining us on an important day. Claudia Sahm.